Real estate, I believe, is the best asset you can have because it's tax advantaged. When you do build up a lot of wealth, sometimes if you maintain that property, you can go borrow money and you still pay no tax. I always tell all my staff, the best denial is a quick denial. So if we can't help you right now, that just means right now, not forever.
Did the loan go through?
The loan went through.
Now I'm understanding why the 2008 mortgage crisis happened.
Yeah.
Welcome back to the Roots podcast. I'm here with my co-host, Max Moore, co-founder of Roots Realty Co., and I am your other co-host, Tyler Lingle. We are here today with Derrick Christy. He is the CEO and founder of Approved Mortgage, the largest and oldest mortgage banker in Indianapolis. They have funded over $6.5 billion in loans, as well as a part of his many real estate investment entities. They've done over $150 million in deals, and he's been a part of raising funds, syndications, lots of great stuff. So Derrick, appreciate you coming on the podcast.
Yeah, thanks for having me, guys.
Yeah.
We love working with Approved Mortgage. We were talking briefly before, going through all those stats lists and pulling them apart. And I was just thinking, like, $65 billion in home loans. What's the average down payment of a home loan? I want to figure out how much real estate volume that is. 65, that's a lot of houses.
6.5 billion.
6.5 billion.
Yeah.
Got it.
See, he just 10x'd. I love the way you think.
Yeah.
I like the way you think.
Well, yeah, I guess just
It will
the
be
next
65 billion soon.
Yeah, right. So we do a lot of business with Approved, and I have to say that the systems are absolutely flawless. Getting to work with Renato, and I've got people calling me all the time from Approved trying to hop on. I'm like, I got Renato.
Yeah.
Stop calling me.
I just say it's just too easy and smooth. It's like I'm always going downhill, whereas Rocco Mortgage or something, you're like fighting your way to get to who's actually making the decisions being passed around to a million different people.
Yeah, it's the difference of being a local lender.
Right. Yeah. You know the landscape. You drive the streets. You know what we have here. Everybody that we've had on the show thus far, there's been one common trend that all those accolades, I think, are built on the back of, which is some version of a hustle in high school. And I want to kind of take you back to you grew up in Greenwood, right?
Yeah.
You know, early days, living in Greenwood, hustling around in high school. Did you have some sort of high school hustle?
I did. Yeah, I did.
What was that?
So originally, when I grew up, I cut grass for the widows on the street. My mother said, "Oh, go cut the grass, Mrs. Pearson, Mrs. S1. Go."
You started as a philanthropist, and now you're
it was because
person.
I said, "Mom, that's like 2 acres and it's $15. Gas prices are pretty high in the '80s," and so I said, I'm not making any money, but it was a good benevolent, thing to do. And it got me learning like, I'm trading a service for dollars. But then after that, I was young in high school, I think, and started right the senior year, like with a good friend of mine still today. We started a cleaning company. And so just, labor. And so we were cleaning commercial, things, and then, started to run payroll, and, you start to learn business. It's a small business, but, that's kind of the way it started out in my side hustle. And then, just kind of continued from there.
Yeah. Did that business fizzle out? Like where do mortgages interject into your
We
life?
sold that little company. We sold it. We had some equipment, and we sold that business, and then I ended up getting a real job, at Prudential Insurance Company of America, and so I got some experience, got my health and life license, got my PNC license, and my Series 6 and 63, so I could do mutual funds, and so that kind of got me into the financial services world. And from there, I worked there only about a year. And from there, I got into the mortgage businesses. Still the same today. I own Approved Mortgage and have for all those years.
Yeah, everybody that has a success track, it's like the high school hustle is there.
Yeah,
because you just have this drive to go and make money. I cut grass, clean gutters, pressure wash, whatever I can get my hands on. At the end, somebody was handing me $30 to buy that mountain bike or whatever I wanted.
Right,
and to be able to scale that up, it's always fascinating. To hear the background of how much that helps.
What would you say when you were doing that high school hustle? It sounded like you were doing the scrubbing and cleaning for a little bit until you got employees. How long were you actually doing like the day to day and like literally showing up to clean?
I think it was. I think we did that for a couple of years, and so sometimes with cleaning, people don't show up.
Yeah.
We did a bowling alley. It was an 80-lane bowling alley, and you couldn't start to clean the bowling alley until 3 a.m. because that's when the leagues ended.
Oh, wow.
It's horrible. And guess what? You get a call at like 3:05, like Janie didn't show up. So you'd have to go drive out.
Of course.
Like, okay, I'll tell you. 80 lanes, you feel like it'll never end. And it didn't until the sun came up. But it was a good experience.
Did you have second thoughts about starting a cleaning business?
Every time they called me
4:30
and
a.m.
said somebody didn't show up.
Yeah.
Yes. Yeah.
I bet
Absolutely.
the day you sold that business was one of the better days.
Oh,
of
that
your
was a
life,
great day.
I would assume.
But that was very intense in managing that labor. And so it was easier from there. So that was a great experience. Yeah.
And my question that I'm kind of curious about is what's the biggest takeaway that you still carry with you from that experience of that high school hustle?
Just that the grassroots of building something, no matter how small. We've snowballed that success and built on that success through the years. But like you said, I mean, you just work toward a goal. You've got a goal, no matter what that is, your mountain bike or
Sure.
for me. My tennis racket or whatever it is you're working for, you've usually got a financial goal attached to it. Sometimes after a while, it transcends that. It's more about the people than a financial goal. The people you serve, the people you work with, and creating something greater than yourself.
I think that happens when passion and discipline meet each other.
Yeah.
You kind of know that you're on a mission headed towards something bigger,
Right.
than just cleaning, lane 37 to get to 38
Right.
to 39. And that's awesome. I am impressed by the ability to make the mistakes and scale to an exit of a company and then jump into the world of mutual funds, which to me sounds like a lot of spreadsheets and not a lot of people. The mortgage industry, I'm always fascinated. How do you get to approved where you're at today? Who did you have to be under to learn how to scale a mortgage company?
When I got in the business by intention, a lot of times this happens in a company. The guy that owned the company, it was just about 6 months. I was there. I went to work there. You'd have to be licensed at this time. You weren't licensed. It's a good thing to be licensed, So it raises the caliber of people in the industry. But when he was going to show me everything, by good intention. You're like, oh, I'm going to train you. You don't have to worry about it. So my first appointment, I said, hey, they're here. And like, I step out of the room, like, where are you? Oh, I'm not going to be able to make it. I didn't know what I was doing at all. All I had was a financial calculator to calculate the amortization of a monthly payment. And I said, well, your payment will be X amount of dollars.
So you showed them the one
How do
thing
you
you
feel
knew.
about that? Yeah, that's fine. Okay, great. First time I had looked at a uniform residential loan application, never seen it before. So what's your name? And so, I just start working your way through it. And like, it was actually pretty painless.
Did the loan go through?
The loan went through.
Now I'm understanding why the 2008 mortgage crisis happened.
Yeah. That wasn't
You guys
solely
like
the
your
reason, but no, I had those appointments on a Thursday. I had 2 appointments on a Thursday. I still worked at Prudential, and Friday I resigned
Wow.
because I did enjoy even that one day. I knew it just felt right.
And what is that feeling that is so rewarding about walking someone through the mortgage process? Like, what is
Because
it there?
you are the one. Without the funding, the American dream doesn't happen. And so for me, you go, well, in America we say oh, it's the American dream, owning a home, and so being even a small part of that, be like, hey, if you're facilitating that capital, that financing,
Not a small part, a large part.
Yeah. So
Yeah.
I mean, they're the ones
underworld.
earning all the money to pay it back, but what we do, it's an honor for them to trust you with a lot of times what is their largest investment of their life for most consumers.
Yeah, I see less shark. I mean, there are some sharks, I'm sure, in the mortgage industry. I see more people that genuinely want to help people and educate people on personal finances and the right loan choice, et cetera. In this industry, we've just had a number of high quality mortgage. It's hard for me to pick who to refer business to. There's some really great people out there that actually really care about what they do. And if I send them a text at 9 p.m. about a client, they'll actually answer.
Yeah.
Renato, your son-in-law, who we do a lot of business with, as well as some others. I don't know if I see that with some agents, but the percentage of agents who are genuinely very well put together, organized, and educational, it doesn't feel like it's as high of a percentage. And maybe that's just the selection of mortgage brokers and originators we've been working with.
Is that a barrier to entry problem? Maybe because you're comparing the real estate agent to a mortgage broker, right?
It's probably just the best of the best in any industry you're impressed with, right? Because I'm like, maybe Renato just only deals with amazing real estate agents. He's like, oh, real estate. But I don't know. I don't know about that. I think you get a lot more hobbyists in our industry as well as some others.
A lot of the agents he does work, they are high quality as well.
Yeah.
I mean, you guys are standout. And, so I think you probably gravitate to one another.
Yeah.
A
players mix and mingle with A players, right?
Yeah. And I know that especially in real estate, people like their flexibility. Mm-hmm. And mortgage is just as flexible. I mean, people apply on the mobile application on their phone. I mean, it's very easy. Work outside the office all the time. Most of the time spent, people are working outside the office, even in our company. But real estate is really seen as the ultimate flex. And so
everyone wants to be in real estate.
They do. Yeah. And so we, kind of recruiting, we're like, well, hey, we're flexible too, but I don't know. It's like, you just see those videos of a real estate agent going through the Starbucks line and getting the Starbucks and but no, both the careers are very, very flexible. I find the people in the mortgage business are a little bit more maybe numbers oriented.
Yeah.
And so, math's kind of their jam, maybe that's a difference. So,
well, when you sign to be a real estate agent, it's so wide and so many avenues. I can go work for new builds, or I can do FHA, first time home buyers, or I can try to focus on listings. It's so wide and you don't even know how to spend your day. What I appreciate about the mortgage industry is that there seems to be there's still this unlimited sales capacity to build a big pipeline and make unlimited income because it's a sales-based, commission-based industry. But there's a little more of a set path I see in some of these organizations, which can be helpful for someone.
Yeah, ours is very broad because we have the name Approved Mortgage.
Yeah.
I don't like saying denied. So I never liked it. In fact, it was the worst. Like there's one part about your job or a few things you go, I do not like. I never liked telling somebody they didn't get approved for their mortgage. So like the name Approved Mortgage came to me really easy. And so I never wanted to tell somebody they're denied. So I got every program that existed. So I never had to say it. Now, sometimes you have to say it, but we want to say it quick. I always tell all my staff, the best denial is a quick denial. So if we can't help you right now, that just means right now, not forever. We're gonna show you, like, look, here's the way we're gonna walk you through the way, to set yourself to be approved in the future. But the vast majority of people we talk to they are approved because we have all the different loan programs. But I tell, our staff, the positive is we have all those loan programs. The downside is you got to know them all. So they have a lot, to traverse when it comes to, because it could be, like you said, it could be new construction, it could be doing an FHA loan, VA loan, conventional. We even do commercial lending. So we'll do commercial loans as well. So it's not the majority of what we do, but a lot of our borrowers, our clients are self-employed or they own a building and they need financing, for their business or for their commercial property as well.
I don't think I was aware of that. I have sent a couple of people commercial wise.
We want to keep a few secrets. I mean, we don't.
Right.
Gotta have a few ace cards.
How do you go from? When did you step out of production and for approved?
I probably when I got involved in commercial real estate, was owning commercial real estate. I bought a big package back in 2006. It's about $26 million we bought, and probably at that time, then I stepped back from the personal production, and then overseeing the mortgage loan officers, and then we started to build a portfolio. Then, and that was in 2006, I think it was.
Most of our viewers are going to be more in the lane of real estate investors, just given the brand that we attract, because we are real estate investors ourselves. Break a syndication down for me from a high level.
Oh, sure. Yeah. Well, the syndication is on a single asset. So, you're like, hey, this is the asset here. Like we just had a 120 unit apartment building. And so it's like, this is the asset we're buying. You know what it is. You've got the financials. And so the syndication, as opposed to a fund where maybe we don't have the asset picked out right now, we're investing into this fund. You're getting a return, an expected return, a targeted return in the fund, but we're going to buy more than one, asset. So you're going to own multiple assets, have some diversity in the fund. And, myself, I believe in this. I invested in 12 different funds as a limited partner. And now today I do syndications as the general partner, and I have other limited partners that invest in those assets. So,
so you're kind of, I think, kind of filling it in for the audience. So it's essentially the capital stack. You have many people filling in the equity portion. You're still using some bank money, some senior debt. Then there's mezzanine. I don't know what all is involved in your capital stack, but there's plenty of blogs people can read about capital stacks. So it's the equity portion of the capital stack. Yeah. There's over a certain amount of people involved in a syndication.
Right.
What I'm curious for is, I think I get that, but I'm like, okay, who is finding these deals? Are you guys just recruiting like deal finders that are cold calling? You just like trade in behind closed doors, like, hey, we got this. Yeah. And are you actually, how much time are you spending doing that, or have you built the reputation that deals come to you?
It's a little bit of all those things. So there's people on our team that are going out looking for deals. We're all looking for deals. That's one of the toughest things is if you find the right deal, the money will come. If the deal's right, people want to invest in a great deal. But then some of it, you've got to marry those together. The right opportunity. We fortunately had an off-market opportunity come available that we were able to acquire this 120-unit apartment complex, and it was right in our backyard. It was in Center Grove Schools, and it's where I live and where my office is at. So my office is literally a mile away, and so that was an off-market deal. But then you've got to have like you said, you've got to have the investor relationship, and some of that is building, a personal brand, and sometimes the brokers, you're the one they call because they know that you have the finance, you can perform, you have the ability. What the agent obviously wants to know is that obviously the day of closing, that you're going to hit that closing date and you're going to have the funding, and so they know, they have the confidence that like I'm teamed up with Greg Allen Commercial Group. He's been in the business in 1975. He's got a great reputation. I've been at it, since the 90s. And so they're like, hey, these two guys, they're closers. And so there's a confidence there to win the purchase sale agreement and have the confidence, the seller has the confidence we're going to be at the closing table with cash.
Yeah, we had Dave Short come on the podcast, and he's done, I don't even know how many.
It was over 500.
Under 500 flips.
Wow.
And he doesn't do any paid marketing or anything to find them. He just, they know he's going to close on it. If you're an agent and you have a pocket listing that is distressed, who are you going to call? Dave.
Right.
He's done 500. He's going to get you paid. He pays 3% from his own cash. Yeah. So these agents don't have to worry about, am I going to work in my own deal?
Right.
And that's what you want. You want to have that reputation that this guy's a closer. So wherever someone's at, you obviously that we talk about the networking tree, which is kind of this like start with one person, and then that person's going to lead you to 3 others to have coffees with, which is going to lead. And all the while showing them that you're listening to what they're saying and implementing it.
Right.
Like, hey, you recommended I read this book. I read the book. Here's what my takeaways. Here's how I'm applying it. And then, oh, wow, this guy's the real deal. If I have something to help him, I'm going to do that, right? Which is how me and Max started as real estate agents. I started as a teacher and had very little clue of what it looked like to buy property. And then within 3 years had built like a 7, property residential portfolio from this exact thing,
right?
Of intentional networking and just following up with people and following through with people.
Right.
That was kind of going really deep into networking. But I do want to go back to the syndication really quick. The one objection I hear a lot of people saying to syndications that I would love to get your opinion on is, but there's so many hands in the cookie jar. I know some very, very successful people that have 1 to 2 partners their whole time.
Yeah.
It's just their equity. And maybe they only can do X many deals. They can't do, we're going to do 50 million deals, whatever it is.
I feel like everybody's sentiment is don't give up equity.
Yeah.
Right. So
I'm just like, why do you like to have 15, 20, I don't know how many, 100, I don't know how many investors are in these deals. Seems like a lot of voices, a lot of people that need to get paid, a lot of expectation.
Well, number one, the LPs that invest the money, they've got to trust the GP again. It goes down to trust and probably a track record. And so number one, that's it. So, and number two, they don't want to be involved in the day-to-day. They want passive income. And so that LP says, I like this deal. They're going out working for free for me, finding the right deal. I don't charge them every look. We do every time we underwrite a deal, we don't ask for a check.
Yeah.
We do all those pro bono, for all the 9 of them. Then the 10th one that says, that's the right one. Then we call the LP and go, okay, well, now we've got the property. And so they're like, great, good job, fellas. And so we're, and many times, the way these deals work, sometimes there's what's called waterfalls. And so, we got to find the right one too, because it's got to make financial sense. They have to make money. A lot of times we're paying an 8% preferred return. We make nothing, make zero. Now, 8%, that's all you make in the stock market, usually on average, right? That's like around since the Great Depression. You go, well, you might make 8% a year. So we pay that as an example. 8% could be a preferred return. We make nothing. So it's like we've got to knock the cover off the ball, on these investments so that we make something too. And then, that might only be starting at 30%. So it's still the LP's getting 70%. They're getting the lion's share of the money. So yeah, there's other hands in there, but those hands are doing a lot of work. Finding the deals, managing the deals. They have the expertise, so like 50 years experience. And, if you went out and hired those people, we'd be really expensive.
Right.
If I worked at a corporate
I think it makes
job.
a lot of sense for the LPs. I don't disagree with that. I meant for you.
Well, right. Well, I just always think about the LPs because now they own 120 doors.
Right.
So it's rough when you own one rental house and they move out. It's scary,
Yeah,
right?
right.
Like, oh no, my rent went to zero.
Yeah.
That doesn't happen. Now you own this nice quality asset. For me too. So for the LPs and for the GP, I can invest, they can invest, we invest together in a higher quality asset because we've combined our capital together in that capital stack.
So they get 8% equity and 8% cash.
They're getting 8% preferred dividend. So what they invested, they get $100,000 invested, they're getting $8,000.
So for you as dividend. A GP, you're the skin that you're getting is the equity.
Yeah, I mean we're putting in equity and they're putting in equity, and so usually what that looks like is a 65% financing and 35% downstroke.
Mm-hmm.
So
yeah, I mean that it all makes sense when I look at it on paper, and then I go, okay, how do you go start one? And for you, the coattail was being able to be an LP, right, within the deals, seeing how somebody else was.
Yeah,
operating.
I mean, because I wanted the same thing. I wanted to invest in great assets. And so then, once, like anything, once you learn, it's okay, well, this is how the structure works and so forth. And, then we said, okay, well, this is something we want to move forward and build this portfolio. And you always want to put a few of your own touches on it, and.
So I'd love to get your opinion on this. We work with a lot of people investing in 1 to 4 units. And let's just say a water pipe bursts, insurance claim, tenant has to move out. Oh, all your income is gone. Got to pay for this. Can be high CapEx, can be very risky, but you have 100% equity in the deal. There's nobody else.
Right.
So let's just say the market does what it did in 2020 to 2022 and just goes crazy. Oh, they could have a higher cash on cash return, potentially with 100% ownership of the asset versus spreading out the risk through an LP position. Who do you think should do the LP investing, safe, easy, Derrick's going to do all the work for me, versus I'm go out, buy that duplex, get it started?
It really depends on their bandwidth as far as how much time they have. If they're like, man, I really love to go do plumbing, like in my extra time, that's what I love to fiddle on the back of that toilet tank. That's good. That's good times, and like, if that's you're like, I'd just rather fix everything myself or I know how to do some electrical and all. Some people like, I don't have to pay anybody. I can do that and I make a little bit of, equity or money. That never really appealed to me. So, like in the apartment scenario, we even for the day-to-day, we have a third-party manager. So they're really good at property management. So, hiring our full-time maintenance tech, hiring our leasing agent. I mean, so that's what they do. So we have a
There's economies of scale immediately.
And it's economies of scale. And it's just like, I'm never going to see anybody really say, man, I'll tell you what, that's how I got wealthy, is doing my own plumbing.
Right.
That's
You
really.
haven't met Rex Fisher yet.
Yeah.
No,
Right. He replaced a lot of furnaces, and he's actually doing pretty well now.
Yeah. But at some point in time, you graduate from that, right?
Yeah, no, he's not doing it anymore.
If you're going to scale. And so, yeah, it's okay in the beginning if you've got some time. But if you don't, if you're like, I'm pretty successful at my career and, but I want to invest in real estate. Talk about real estate for a minute. I mean, real estate is one of the best, what I believe is the best asset you can have because it's tax advantaged. When you do build up a lot of wealth, sometimes if you maintain that property, you can go borrow money and you still pay no tax. Mm-hmm. It's a loan. Mm-hmm. It's not a sale. It's not a taxable event. It's not a distribution.
Cash out refi.
Yeah, you do a cash out refinance, and I mean, you've got cash. You still own the property. It's like, is this legal? So yeah, it is. It's in the IRS tax code. So that's why so many people are attracted to real estate. Now, if somebody's full-time real estate, you guys have a benefit because you have a real estate license, so it automatically makes you full-time real estate, your profession. Other people, that's what happened to me when I bought that $26 million package back in 2006. Then that got me as full-time real estate, and I could fully depreciate. So that was really offsetting my income, what taxes I was paying when I made the money from the mortgage business. Now I was full-time real estate. I was spending enough hours per year. And then, so it's a fantastic, tax benefit as well.
So kind of translating that for the audience, you now could count those losses against your active income from your day job, which most people can't. It's passive losses, so it can only be applied to passive income.
Right.
There's different brackets there.
The amount of realtors I hope that get to watch this part. When you compare apples to apples, my small little tiny chunky portfolio that has its own problems, right? The amount that pulls my tax rate down compared to the next guy that does the same exact production as me that owns no rentals, still full-time in real estate, still has that tax status compared to me who has a portfolio. It's like second to none how much I'm saving, paying maybe a fraction of an eighth of what they're paying.
Well, they get a 3% credit baked in too.
Right.
Yeah, that's right.
But they're not buying property.
No, it's. I don't think people
Or
fully
they rent.
understand.
They don't understand.
I don't think they understand the economics of it, or else they would be doing it. Because you get the appreciation,
right?
You get the mortgage balance pay down, every month. You get the depreciation that you're able to write off. I mean, when you talk about companies that sell, everybody's like, oh, it sold for a 10x multiple. That's real estate,
right?
I mean, that's real estate. So I mean, it's a great multiple, aside from all the other benefits that comes with it.
Right. Mm-hmm. It's every year around, February-ish, Tyler will go have that special meeting with his accountant and he'll text me and say, I remember why I own real estate now.
Yes.
Yeah.
Sorry for complaining about it all year.
Yes.
The amount that you're able to save there. It's fascinating. What you were asking is, why would you go buy the single family? Your response, if you want to fix the toilet, go do it. That's great.
All our investors just fired us. They're going to contact Derrick.
But not necessarily, right? So some people may say, oh, if I want to do, because I was kind of hearing what you were saying.
Some people want the control of it.
They want the control if they want to do that. That doesn't mean you can't have a fantastic handyman in your corner or a great a contractor.
Well, it starts at the single family, I think, and you can get that duplex, get the quad. But once you're done with that, I feel like you got to scope out and look at how do I get into commercial diversifying? You're doing it right now, diversifying into commercial. You went into STR. You stepped up to the plate and swung at 26 million in a package. But what was in that big package? Was it single family homes or
No, they were retail shopping centers, some development ground, office space. So it was a portfolio. So yeah.
Yeah, it seems like a behemoth.
But I think it's just a matter of zeros, right? So the reason I bought, truth be told, so my first piece of real estate I bought was my home, my personal home. But then the second one was a rental house. So I bought one. And so it was I think it was back then, it was $10,000 is what I had to bring to the table. So, it wasn't 50,000 because if it was 50, I wouldn't have done it because I didn't have it. I didn't have that much. So I think that's why, because syndicated deals are usually when you're going with an LP. Unfortunately, you can't take a $10,000 investment. It's got to be more. It's got to be, most syndications, 50, 100, 250,000. So there are usually more zeros.
Right. Not only do you have to have the network, but you also have to have the net worth to be able to go and access
Well
it.
said.
Sorry for the quick interruption. We have no sponsors on this show. It's completely free. Just Max and I trying to teach people how to build wealth through real estate. However, we do have an ask for you. If you're on YouTube, could you like this, subscribe, Spotify, follow, and then please share this episode with a friend or a colleague or someone that would benefit from it. That would help us grow our audience, and we would massively appreciate it. All right, that's it. Back to the rest of the episode. I would love to go back because, I think for a lot of listeners, including me, I was going to say 3 years ago, but still today, you went from being personal production, I'm assuming being a really good mortgage broker, mortgage originator, to buying a $26 million portfolio. We didn't even cover anything in between there.
Yeah.
And I'm just like, how did you, we had John Murphy on. He's a successful, started MJW Mortgage.
Yeah.
They're probably a decently sized competitor for you guys.
Oh, yeah.
Both high quality companies, great originators. But he talked a lot about what makes a really good mortgage broker. And the first thing he started with was integrity.
Yeah.
I thought he was going to say hustle, grit, whatever. It was like high integrity. I was like, whoa. And then he just harped on that for the next 15 minutes.
Yeah.
What would you say made you successful when you joined and you were the little bottom of the totem pole looking at the mortgage application to really starting in that flywheel spinning in the mortgage space? What helped you get that going?
Yeah. Well, the one was the passion that I really loved making it happen for people. Again, it was, like I said, it still is a huge honor that they trust you with something so important to their family. So for me, that I had a passion for that. It was like, wow, they could have, and I was young, so for me at the time, it's like, there's people like twice my age, they picked me, it was like, oh, I can't believe this. So it was a huge responsibility, number one. And I was honored that they selected me. So I worked my butt off to make sure everything went super smooth. And back then, we weren't texting, we had phones. So I had like 3 phones in my office. I'd literally be answering multiple phones. Okay, please hold, and answer, because I wouldn't let it ring. I wouldn't let it go to voicemail. I'd answer every call. My cell phone, the 2 phones in my office, the 3 phones going.
Like multiple on hold.
Oh yeah. So I would. and so because I what it did, and I'm still probably scarred today, but the urgency, I had extreme urgency. I probably still do. It's just extreme urgency. Now it's just who I am, but I don't. It's rare if I don't call somebody back in the same day.
It's funny because I think there's a commonality here with mortgage brokers and real estate agents, and probably anyone who's trying to get on that sales service path. We had a mortgage broker come to our team meeting from Fairway Mortgage. I'm trying to kind of scoot you guys, but he mentioned, we asked him what makes you so successful, and he was like, I am attached to this.
Yeah.
And he's like, it doesn't matter the time of the day.
Yeah.
I care about people and I want them to get answers quickly.
Yeah.
And I hear that from way too many people, and I hate the answer because I'm trying to get away from this.
Right.
And my response times have been generally gearing slower over the course of my career because the trade-off is larger now that I'm a dad and want to be a good husband, want to have good mental
That's a challenge.
health.
Yeah.
Whereas at the beginning, I was like, I'll leave everything for this dream. Let me just answer everything. And you're just responding like stupid stuff at 10 p.m. Like, why am I doing this? But
Right.
it was so important to building the personal brand at the beginning.
Right.
Which it sounds like it was for you.
Oh yeah. No, absolutely.
Has that urgency backed down now? Or do you find more headspace from that? Or
I'm still like that. So like what's in my, now I have a lot of people that work for me. So now I don't take those. If there's I don't take maintenance issues. If there's a maintenance, that's not me. So I want them to have that same urgency with the maintenance issues or with the leasing, or with the mortgages. But I'm not taking all those calls. So what's in my sphere as far as my responsibility, I'm still that way. I still have extreme urgency. And but I'm able to because I don't have.
But with your team,
with my team,
right.
Yeah.
Mm-hmm.
So.
I think the probably differentiator from what you struggle with is, and what you said is 3 phones in the office, right?
Yeah, not anymore.
Right.
Yeah.
But when you went home, the phone stayed in the office, I think that's one of the struggles.
You still had a cell phone. I mean, come
That's
on,
fair.
I'm not
Right.
that old.
Well,
Yeah. I was guessing
I still had the cell phone.
right. I guess in my head, I'm thinking you're just giving out the office number, right? Reach me at the office.
No,
But
you would, yeah. I mean, it was, and we had those conversations with, my wife's like, this is our family vacation. Those are that's you got to make those decisions, about how to balance, work and family.
It's like, but remember why we're on the vacation.
Right. I know.
Yeah.
I tried that one, Max. That's tough. That's tough.
I bet now she's not as annoyed.
Well, I mean, there's So I mean, again,
about back then, like there's maybe some understanding.
yeah,
Yeah, it's
some.
maybe not.
Some.
Do you think you could have gone like 20% less intense?
Yeah, I think you could. I think you can always set boundaries and still be successful.
Yeah.
Sometimes we take it too far. And
yeah,
absolutely.
yeah.
Absolutely.
That's kind of my motto for the summer is like just 20% less intense, and then you can enjoy the day 100% more.
Yeah.
Yeah,
and
it's
some of
okay.
it just depends on your personality. Like some of the loan officers you have, they're like so chill, and they're urgent, but they're very chill.
We don't typically struggle with that personally, but
Yeah.
yes,
Yeah.
Same
And-
with a lot of people. They need to go 20%. They need to go 100% more intense. Most
Yeah.
people.
Yeah. So yeah, just everybody, everybody's personality and behaviors a little different, but yeah.
Right.
I envy the person that can just let it go for like the rest of the evening.
Yeah.
There's a problem in a transaction, it needs to close tomorrow, and there's like it'll figure itself out.
Yeah.
Or it won't, and that's okay.
I
And
will
there's a lot
say
of those in my industry.
in that point, I've always slept well. I don't like, generally it doesn't keep me up at night. So
That's
even
good.
if it's, it's like, well, there's nothing really to go on now. So I think I'll just catch some good sleep. So,
Yeah, that's true. I guess everything does close down. I want to go back over to the syndications for a second. As you're building out, so this will be the first fund, is what you're venturing off towards.
Yeah, we've done syndications. Yeah.
And with the fund, you said it's not identifying a building or the investment. They're betting on the horse, right?
Yes, exactly.
And in the track record, when do you have to raise all the money before going out and looking at any deals? Kind of similar to
It's the ideal scenario, because then think about it. If you have the money sitting in the bank, man, you can go in and negotiate it makes a big difference in your confidence negotiating the transaction. Because sometimes you can win on speed. Well, it's hard to close really fast if you don't have the capital.
Yeah.
So then you go, well, I've got to get this contract, and now I've got to go raise the capital enough time to be able to close and perform. And some of these times you're putting down, the earnest money. I mean, you may go, well, I've got $250,000 earnest money down. At some point in time, it goes hard.
Earnest money starts to matter a lot in those deals. Yeah.
Yeah. We just did, it was out of the last one we did, it was a $100,000 extension fee, and it was hard, if you go, well, it didn't work out. Well, you lost the 100 and the 150, so you lost 250, if you walk. So you don't want to do that. So if you had the money in the fund ahead of time, then you don't have the risk of losing the earnest money, like as an example.
I think where I struggle is I can find the deal, I can find the tenant, I can find all that. It's finding the funds and being able to go out and raise that much money. It's like, it's a behemoth.
Well, when you have a high grade asset, it gets easier.
Mm-hmm.
Like the fact that a lot of people say like,
better.
Well, yeah, like somebody's like, oh man, that's great. If they've owned one unit but they aspire to own 4 units, but if they can own 120 units, it's a big motivator.
It's the asset kind of sells itself, and then if you have the right integrity and brand yourself, it's a no-brainer. What makes a good real estate deal for you now?
Well, I mean, we're to get investors' attention, our attention. We've got to have double digits, and we're targeting 15% annualized return. So we've got to find a way. There's got to be upside in
For
the
them
deal.
or for you or for everybody?
for all of us. So we've got to find an asset that's going to turn a 15% annualized return. And so otherwise, it's with all the time and effort it goes into, it's probably not worth the effort.
Does that include because some of the nuts and bolts of how these are calculated fascinate me. Is that just from cash flow, or is that including is that a 5-year hold and liquidating it?
So everything, the liquidation, that disposition, you could have taken no distributions, there. That's not our goal. and whatever you exited, whatever that disposition was at exit, or the combination of that. If you had distributions along the way, which we always like to have that cash flow along the way, in addition to the exit, so that total cash proceed from beginning to end, cradle to grave, is what that IRR is calculated on.
And how are you underwriting the deals you're doing for your syndications? How long of a hold do you typically try to hold these assets?
Yeah, so we have an analyst, and so that's like we have a construction. We have people that in construction, like I said, since 1975, have an analyst. I'm a finance guy. We have another person on the capital wealth side, so raising capital. So we have a really great team, and so that lends itself to what we're doing, because we have the right talent in each one of those areas. So, but the hold time, generally, probably in the sweet spot's probably 3 to 7 years. 3 to 7 years. So
yeah, commercial. You don't find as many people investing in commercial real estate saying, "I'm just going to hold this till I die," because you realize really quickly, even these guys owning these single family homes saying that, they say it when they're like 25, like, all right, because it seems really smart. I'm going to buy this single family home in Tuxedo Park for $100K, and then it's going to be worth
I remember that. I financed on Tuxedo Park. Yeah. I remember that.
But it's like they don't realize the opportunity cost of not using the equity, and they realize they won't.
Yes and no. Now, like the stuff I own, I have owned it, and I won't sell it.
Okay.
But I didn't take outside investor capital. See, with the syndications or funds, people have to have an exit. They at some point, not everybody needs their capital back. But if just one needs their capital back, you have to have an exit. Now, sometimes there's ways to do that. We can spin that off, and you get a fair market appraisal, and then maybe it goes into a different fund, and maybe you can continue to own that. But there's a taxable event then. I don't want a taxable event, so I've continued to own the property. I don't want to sell anything on the stuff that I bought with my own capital. And if I wanted money, then if I wanted to leverage capital, then I just go get a loan. Just go get a loan. I don't have to sell it.
So you have held your personal real estate, just buy and hold.
Yeah, all that $26 million package, that and more, we bought, and we've not sold it, so we don't want to sell it.
And the cash flow.
I hope my kids don't sell
it. Yeah, yeah. And those properties, is that meaningful cash flow?
Yeah,
for you,
yeah. It got to be in the beginning. You go, well, now, then it was like, oh, well, someday, and. But yeah, today it's meaningful.
That's awesome.
Yeah,
that's really cool.
Yeah, and as you get older, then eventually those mortgages go away. You pay off the you don't have a mortgage anymore.
Yeah,
I think it's like getting over the time horizon. The beginning, it sucks. It's a lot of work and energy into it, and it gets a little bit more stable and bubbles up here and there. But getting over that horizon where cash flow can really start to unlock, I think that's what people struggle.
But that's every business, isn't it? Where it's front loaded.
Right.
All the work's up front, all the capital's up front.
Yeah. It feels like you make no money, and then, too many people exit right before they do.
Yeah. I think it was like Mr. Wonderful, he was like, the most important thing is like getting to 100,000. It's like these key benchmarks. If you can just cobble together 100,000, and you make good, real estate, or make good, I just said it, Freudian slip, make good investments, be it if that's, real estate or stocks or what have you. But then that next benchmark is kind of like, what's so much easier once you've got 100,000 to get to $1 million. So now you've got $1 million in capital. Oh my gosh, the 5 million comes so much quicker. But it's true. Like, so Charlie Munger with Warren Buffett, he just passed away. It was like 99, wasn't he? And he said, you got to figure out a way to get $100,000, and then the rest becomes easy. But it's like that first 100,000 is magical.
What would you do with 100,000?
I put it in real estate.
Yeah.
That's what I did.
Yeah.
The first one I bought, ironically, the person that I, have partnered with is Greg Allen. I bought his office building. So that was back in 1998. So that was the first 100,000 I put in that office building, and that kicked it off.
Would you do? You go buy an office building again, or would it be another asset?
It'd have to be the right office building. It'd have to be the right market. I wouldn't say no. I wouldn't go after office, but the office market, the landscape's changed quite a bit. So yeah, it'd have to be the right scenario. Most of what we own, we do own office, but we own retail, a lot of retail, some development ground, hospitality, and multifamily.
It's great. I love how diversified and
I'm a paranoid investor. I'm extremely paranoid. So very, very diversified. We own Ben Franklin Insurance. We own a independent insurance agency. We finance all of our properties there. We do all of our own property management for our companies, Horizon Property Group. We don't do any third party. So we won't do that. Don't contact me about that. Unfortunately, we don't. But yeah, so we do a lot of these services. My wife owns MVP Title, so she so the title, we're able to give some business on the title side. So there's a lot of complement to the group of companies.
You just need a contracting business now.
I know,
You need to be a
right?
builder, and then and then you own.
Well, my brother-in-law's a builder.
Yeah.
And he owns Greg Allen Homes, and then my brother owns Indy Roof. So we do have yeah.
Got the whole stack there.
That's great.
I didn't hear real estate broker in there though.
No, that's right. That's right.
Agency.
I've always been very sensitive about that because I mean the
mortgage.
Yeah, the real estate brokers are good to me. So I'm like we want to be supportive.
That's smart. Yeah.
We don't want to compete.
Yeah, put the baby first, the mortgage business. I like it. Yeah.
And I've always had this theory. I don't know. You tell me if this is true. So I don't know that I've ever asked this question of a real estate professional. So when I go and I find a property, I never go and represent it. Like if it's a commercial property, I always go through that listing agent because I know then it's a me deal because I'm like, well, that's double the commission. So I never go represented because you think that gives me a better opportunity to win the deal?
In the commercial space, yes.
Think so?
In residential, I would say if you have the acumen to go after exactly what you want, and yeah, I've picked up the phone and rep both sides on listings. It's very rare though, because a lot of people need the hand holding to get to the right, to get to an approved. They need that agent to take them that way.
Right.
Get pre-approved, then go and get on the search.
But I mean, as the buyer, when I'm competing with other buyers to win the deal.
Yeah.
So if somebody comes in represented, they go, well,
commercial,
if I accept that offer, then I'm only making half the commission. But
on commercial, absolutely. I mean, most of the time it's just the listing agent doing it. I don't know if they're necessarily. So I think usually they just negotiate their rate. I think they might be making the same regardless, is my understanding. Yeah. There's just not as many buyers agents for commercial.
Right.
It's mostly the listing agents dominate, and then people work both sides.
True. That's true.
In the residential space, it just depends, I think. I do think there's some people that I've been on both sides, and I had a contract with the seller first, and the seller is really the true winner because they're paying less in total commission. Yeah. The buyer didn't get better terms. They could have had representation negotiate better than I did.
Right. No, that's true. Yeah.
So I think it really just depends in residential on how well they're able to understand the levers. Like someone like you, I think it makes sense. But
yeah, I think
we like to work both sides as listing agent. I'll put it that way.
Yeah, absolutely.
So, I mean, the way that you make money and stay in our industry is by bringing property to the market, right? Because everybody stopped bringing property to the market. If nobody listed property, there would be no property to buy. And having that listing and bringing a buyer to it is hands down that's how we've been able to get so many listings. Our listings with Roots, I mean, the year we started, I bet we had I'm not even joking, 10 listings. Yeah. We have I don't even know this year on track for. We have over 20 on the market right now.
We have 20 on the market now. So I mean, every month probably doing about that. So and it's because we don't just post it and leave it there to hopefully someone will come by.
You guys do a great job marketing.
We just try to go find the buyer. Yeah. That's what you should do.
Yeah.
That's what I think your commission pays you to do.
Yeah.
And you'll make more too.
Yeah. 79% of our listings have been limited agency this year. We're on both sides. Yeah, because we're bringing the buyers.
And we usually have another agent represent them. So I have done the whole me both. We've just had some bad experiences where it burned some bridges with the buyers or the sellers. Felt like there was some bias.
So you actually give up your representation rights. We steward the deal at that point.
I see.
Yeah, you're not allowed to essentially be a fiduciary. You have to just be a mouthpiece.
Right.
And yet, in some of those deals, there needs to be a creative problem-solving solution, and it puts you in a bit of a bind. So, I think we try to bring in another agent to represent them to do it the right way. Yeah. That's the benefits, I guess, of having a team. But
right? It's one of the whole purposes that we have a team too.
Yeah, absolutely.
Thanks for coming on. We have a couple
absolutely.
questions, rapid fire, before we wrap up.
Yeah. All right.
It's our best segment here. Everybody should listen to this part.
Okay.
And this should be the whole podcast.
So talking Bargersville, what is the best place to grab a bite to eat if it's Friday night?
Oh,
Go
Taxman.
out. Yeah,
Got to go to Taxman.
Taxman.
Yeah.
Why Taxman?
Taxman Brewery. I mean, they have all their own. They make their own beer.
Yeah.
So they've got it's a brewery.
Great Belgian
beer. Belgian beer and gastronomy. I mean, the food's good. They've got a wine list there. So so it's a full.
I see on
bar.
the Instagram stories you guys are there about once a week, if not twice a week.
Yeah. No, we're big supporters. They're great friends of ours. And Nathan and Leah, actually, we partnered with them, the Taxman Hospitalities, who runs our Church on Jefferson Event Center. So they do all the catering and for weddings and events and things like that. So yeah, we trust them tremendously.
We would love to get them out to Danville. So I might want the connect.
Yeah, absolutely.
It's a small town, and it has a similar look to Fortville and Bargersville.
Well, they've invested a lot in Bargersville. So not only do they have Taxman, but they have P&L, Pizza and Libations, and they have Upseller and Cellar Market. So, actually 4 restaurants in downtown Bargersville. So they've invested heavily in Bargersville, as well as they have Cityway Taxman. They have Fortville Taxman. So
they've been a big part of the sort of restoration of Bargersville.
They have. They kicked it off. They had the confidence first. Somebody's always got to be first. They were first.
That's what you need in a small town.
Yeah.
Right. We kind of have that a little bit going on in Danville. There are some restaurant hosts that have moved in to make a difference.
Danville is not hopeless at all. It's doing fine for itself.
Yeah.
It could just use an upgrade in terms of a place like a Taxman would be really cool for it.
Yeah.
Yeah. Some sort of staple.
Yeah.
What's one habit that's changed your life?
One habit?
Yeah.
Probably working out. I mean, I would say, I try to every day, stretch and work out. You start getting a little bit older, you know what I mean by stretch. But I want to be. We've talked about pickleball, so I want to still be able to move and stretch on the pickleball court. So I want to be athletic as well as not just strong. But
That's great.
Healthy joints. So yeah. But that's probably for a quality of life. And that's something that kind of as a family we do together. Everybody's headspace is geared towards health and longevity.
Yeah. That's awesome that you lead your family that way. I love it doing it for yourself, but then it's really cool to see.
Hey, sometimes they lead me.
Off.
You don't always want to go down to the gym.
Right.
Yeah, no, that's a good point.
You go through seasons.
What is an area of your life you're currently working on growing?
Always faith. It's always a journey. It started out as a ski trip like 23 years ago, turned into a weekly Bible study. And so, I've been in that Bible study, same group of guys back for 23 years. And so, but, it's we've read every book of the Bible and, some multiple times. And so we still continue to get together. In fact, I'll give a shout out to some of the guys. They moved, they left here, Indiana, and moved out west to Colorado and Arizona. So our Bible studies at 7 a.m. So they're getting up in this Bible study like 5 a.m. It's the same guys. So it's really, so through that, it's been some amazing relationships, some closest friends.
Yeah. That faith is the journey of a lifetime, right? You're never perfect, can never be in a full image, right? But always aspiring to get closer and closer.
Yeah, absolutely.
Well, thanks for coming on, man.
You bet. Enjoyed it.
If people want to find you, where can they find you? Where should they
all of our companies are at derrickchristy.com. So I think there's a link to all the companies there.
Yeah,
That's great.
We'll make sure to link that below. Well, this has been another episode of the Roots podcast. Leave a comment below. Tell us, if you want to get in on Derrick's next syndication or fund here. Bring him a bunch of money.
Yeah.